Hello friends, welcome to this video. So currently I want to show you guys a trading strategy which is actually simple. So give me a like and a thumbs up, and let me show you all the settings of the strategy, and then I'll explain to you how it works. So the first thing we are going to do is first going to clean all the indicators, right? So I've cleaned out all the indicators so that you see a clean chart. So we're going to add the first indicator, and it's a 200 moving average exponential. Apply to close. This pixel is 2 pixels and the style is black. It's going to come as a line in between, right, like this. The next we are going to add is a parabolic SAR. So it's called the parabolic SAR. Step 0.02, maximum 0.2, style 2 pixel, right, the color black. And then the final indicator we're going to add is an RSI. So it's called the relative strength index. The settings, we are going to change the levels. So you're going to add a 10, a 90, and a 50, and you're going to change the 70 to 75 and a 30 to 25, and you tap done. Now, how does the strategy work? It works very simply. So we're going to be looking for scenarios where the market is either going up or down. So over here we can see that the market is, so over here for instance the market is going up, right, and it is going up based on a set of rules. So how do you select a trade when the market is going up? Very simply, the first thing you want to do is you want to go to a higher time frame, right? So you can go to the 4-hour time frame, and on the higher time frame what you want to do is you want to look at the color of the candlestick. So the color of the candlestick, or you want to look at the direction of the trend. So over here you can see that the color of the candlestick presently is blue. So the candle color is blue. On your normal charts the candle should be green, which signifies a bullish direction. So here I change my colors to blue and gray. So here the blue signifies a bullish direction and the gray is for a bearish direction. Now then you go to the lower time frame, the 5-minute. On the lower time frame you're going to look for where the chart, right, is above the 200 exponential moving average. So you can see clearly here that over here the charts, the candles are above the 200, and over here they are below. So right now at this position here for instance, right, the candles were above the 200 moving average. So we are going to be looking for a trade going upwards. Already we've checked the higher time frame and we see that our direction is upward, right? So when we come to a lower time frame we must take a trade in direction of the check which we made on the higher time frame. Now there are some confluences you need, and these are the confluences. That's why we have the indicators. So you have to watch the dots, right? The dots, right? You can see that the parabolic star dots have come underneath the candles over here, and when the chart is going up, when the candles are going up, right, it gets gets to a point somewhere around here where you can see these dots here too, where the market crosses the dots which are here. So at this point right here, this is where you place your entry, this is where you enter. And then if you want to place a stop loss, you place a stop loss here. So your stop loss will be here. And your take profit, you take it 1:1 or 1:2. So 1:1 ratio, 1:2. So you can take profit around here. Right? Now, extra things that you can do is to check on the RSI, right? And when you check on the RSI chart, you should look for when the RSI crosses above the 50. So over here we can see the RSI has crossed above the 50 mark. And then that also signifies that it is a buy because the chart has gone above the 50. So make sure that the RSI has also not touched the 75 when you enter in a trade. At this point, it had not yet touched the 75. But then when it touches the 75, right, that is the point where you can move out of the trade. So that will coincide with the risk to reward ratio, the top there. The same rules apply for a sell.